Good afternoon. So
Adrian is excellent. He's going to do great.
So I'm in a fortunate position where I've actually co-invested with two of our panelists. And clearly we invest for one reason only. Other than the greater good of mankind, we invest to have exits. And one of the big challenges we've had to date is we've seen some M&A in the region, but real proper exits have been severely lacking. So I have some strong opinions on this, but since I'm actually not the invited guest, I'm going to hold back. And maybe let's just go around and do some quick introductions. I think everyone knows Kylie, but please let's go anti-clockwise, do some quick intros, and then I'll fire some questions.
So I'll start. Hi, my name is Suresh. I'm currently working with Seek Asia, which owns the brands JobStreet and JobsDB in this region. I started off with JobStreet about 16 years ago, grew with that organization, and last year we got acquired by Seek. So I'm there with Seek Asia now. I'm the CEO for the group.
That's okay.
You guys were making a round of introductions. Maybe we can just continue for the benefit.
For introduction, my name is Thomas Baum from Rebate Networks. Not a kind of real investment fund, more an entrepreneurial limited company trying to invest into founders and early stage companies. We have done quite a lot of investments, especially also in Asia and Southeast Asia, and have also made some exits in the last, I think, kind of 5 or 6 kind of liquidity events or exits in Asia over the last 5 years.
Hi, I'm Kylie from 500 Startups. We're the world's most active seed stage venture capital firm. We've invested in 1,200 companies in 50 countries, and we had plenty of exits. Right now, I think probably about 80 plus. But for the firm, it's still quite young. It's a 5-year-old firm. I manage the Southeast Asia portfolio, invested in about 50 companies in the past 12 months, including GrabTaxi, iMoney, Bukalapak, Carousel, and many others. Prior to this, I was an entrepreneur. I built an e-commerce business I sold to Groupon, and I built a media business called Says.com, which was merged and acquired by Catcher Group, right, into Rev Asia. And so this topic of Southeast Asian exits or exits in general is like a very interesting topic as we see things, as we see the scene evolve. So look forward to discussing this with the rest of my esteemed panelists.
It's always a hard act to follow, Kylie. We have 19 investments in 7 countries, so not quite at that same scale. But our difference is Ardent Capital focuses purely on e-commerce opportunities and purely in Southeast Asia. So the topic today is of real interest to us because if we're not seeing any exits in Southeast Asia, we're in deep trouble.
Hi, I'm Enrique Gonzalez. As you all know, I'm the fashionably late moderator. I'm the CEO of IP Ventures. We incubate and finance technology companies in the Philippines. We've funded over 20 companies, produced about 6 exits over the last 7 years. I also run a venture capital fund with SoftBank in the Philippines. And very exciting to be moderating this panel. It's a very relevant topic. And I think it's very applicable that we're the last panel for the whole event because after an exit event, there's usually a big party, which is at Zouk tonight. But, going to the topic of Asian exits, when we look at ASEAN today versus where this was 5-10 years ago, I think there's been a fantastic ecosystem that's been developed over the last 5 years. So there's a lot of good things to talk about. The one question I wanted to ask was, what's missing in your views? And maybe we can spend some time talking about that. I'd like to start with Kylie, actually, because of your seed and early stage financing experience.
Well, I guess it's a very tough question because also I'm like maybe deludedly optimistic, So when people ask me what's missing from the ecosystem, I'm just say just give it a bit of time, right? Because if we talk about all the pieces it takes to create an ecosystem, from influx of new founders to seed stage capital to Series A, B, C, D, all the way to potential acquirers, having local IPO markets open up, all these things are trending positively, right? So, and I think that all of them also have a compounding relationship with each other, right? As all these things grow in tandem, the ecosystem just matures at a rapid clip. To take Malaysia for an example, like a year ago, I tried to organize a party to invite all the startups over there, and we just hang out, and there's not too many people we could invite. But very recently, we've just filled up a rooftop, in partnership with Magic. We threw some parties on a roof, and I was just shocked. We had to think just in 12 months, right? You see such a rapid difference in one city, and it's the same things happening in Bangkok, in Jakarta, Manila as well. Recently, yeah, I think like a lot is happening at a very, very fast pace. So what's missing is just a bit of patience. Let's give it a bit of time. I think things are looking up.
I think he's got it all covered. So just to add, maybe it's maybe volume or quantity. It's as Kylie said, it's trending in the right direction, but good if it picks up in terms of numbers.
Now, are you guys concerned at all with the recent downturn in the market? There's a saying that if the markets sneeze, we all catch a cold, and it might affect the financing that trickles down to Southeast Asia, affects future valuations and exit opportunities. Are you guys concerned at all? And maybe a more specific question is, if there's a concern, how long should we be concerned for?
So, well, we are based in Germany, so I have a more outside view on the region here, but I'm not at all concerned about what's happened in the last weeks, China stock market and so on. It's what we saw today in the presentation from Paul McKenzie, the consultant, about the market development. It's just the beginning where we are, and we are convinced that we will see enormous changes in all kinds of living spheres and value changes, chains. So we are convinced it's just the beginning, and it's a marathon, yes, but we are not at all concerned about short-term developments like we saw in the last 2 months.
I agree.
Well, I think another more, also a quantitative perspective, like yesterday I presented like this $1 billion unicorn list comparison thing, right? When you look back at the years, a lot of the current multi-billion dollar companies on that list, the years they were formed, a lot of them were formed in the worst of times. Like many of them were formed in the worst of economic times, So I think that as long as the entrepreneurs and investors are willing to persevere, this won't affect us in ways that people see.
Yeah, where I think we're at danger is in the later stage. So I got very excited in December last year. If you look at the previous 10 years of tech and internet company funding in Southeast Asia, we had 100 million plus funding rounds, 0. And then in the space of just over a month, we had 3. We had Tokopedia, we had Grab Taxi, we had Lazada. That was phenomenal. Like that was the first real step to a big sort of billion-dollar industry. And then not much has happened since. And then just now, we know Matahari Mall is out raising 200 million. We know Lazada's out there raising another roughly 180, 200 million as well. So it's slowly happening again. The challenge we have is those big players and those big amounts of money are affected by the markets. So for most of what we do, early stage is truly unaffected. We've got 3, 5, 7, 10-year time horizon in front of us. But when you start getting into unicorn territory, your exit opportunities and your PE and big VC funding opportunities are quite sensitive.
Yeah, so once again, if you're an entrepreneur and you've got a great idea, I think this continues to be a good time for you. I think that, downturns give people with new, innovative, disruptive ideas a great opportunity to move faster than the traditional players. So I think we all need to look at this as an opportunity, really.
This might affect Seek in a way, though, right? If there's more unemployment and people aren't hiring as much, and Seek get affected a bit?
So typically, historically, what we've seen on the online business is because we've been disruptors. Every time there's a downturn, our business actually grows because more candidates use us and more companies are looking for more effective media or more effective channels. And so we always come out better. So we're expecting the same this time. I think if we look at markets like Indonesia and the Philippines and Vietnam, still big, huge growth opportunities. So even if people are not hiring as many as before, many will look to hire through more effective channels. So they'd come to us, and tons and tons of candidates will be looking at us. So those are all big opportunities for us.
Just a follow-up question to that, and I think your business model benefits from the very young demographic that Southeast Asia has, and a lot of these young people will enter the age where they start getting jobs. So you're clearly a beneficiary of that. Can we talk about ASEAN and the Asian economic community? And there's been a lot of talk about ASEAN integration, free flow of labor, capital, and goods. And from your business, how does the whole integration of the region affect you guys? Have you looked at this?
So I think the integration would definitely help plenty of businesses, and definitely would help businesses that are integrated across the region, that have a brand in each country like we do. So that's all good for us. But if you look at labor migration in this region, labor migration is actually very low. Outside Singapore, there aren't that many people in the blue-collar space moving from one country to another country. That exception being Singapore, obviously. But if you look at sort of the blue-collar space, there are plenty of people that are moving, but those are not yet on our database. So my expectation is that at least over the next 3 to 5 years, white-collar migration between countries is still going to be low. A lot of the rules that you would see, for example, in the EU or mobility across the EU, not here yet. Again, all outside Singapore. Yeah.
I think when it comes to the ASEAN, there's really no question on the fundamentals. I think the question is more in terms of the readiness of the capital markets. So we've seen a lot of big, successful ASEAN companies in the tech space list overseas. A lot of these companies tend to like to go to NASDAQ, for example. Some end up in Australia. Any thoughts on the capital markets in Southeast Asia?
So we help our companies raise funding, so I regularly sit in on pitches. And one of the things a startup CEO learns very quickly is to look an investor in the eye and with all sincerity say, yes, our exit is an IPO. Now that's a complete lie in 99.9% of cases, because it's M&A that is the most likely exit for pretty much every company that we have today. So how do we get from where we are today to big enough companies to have genuine IPO exits? What we've seen so far is that really the only viable market is the ASX today. Hong Kong's too difficult, Singapore's too difficult. So I have a question back to the panelists. If we have a company that's worth 200-300 million and it wants to exit as IPO, Kylie, do we go into the US? Thomas, do we go on the German exchange? Do we list on the ASX? Like, what do you guys recommend?
Well, there's some new evolutions to the everything that you've said, right? Everything you said is like very, very true. I think recently, a lot of people would say, oh, Southeast Asia, Asians, this herd mentality and all that. But something has been working, this herd mentality is working in our favor. So in the Philippines, when Nick Nolito listed Surpass, right? It was a $300 million US market cap. And then a lot of people are saying that you're listing a tech company in the Philippine Stock Exchange, Historically, all tech companies who attempt to go on the local public markets, just nobody appreciates them, nobody understands them, they're not gonna grow. Today it's like for over $400 million US market cap, and he's completely digital payments space. Now that creates like a benchmark for the rest of the Filipino companies, the other local companies, to start thinking about their local companies a whole lot more. Another guy I had the pleasure of traveling with throughout my recent Philippines trip, his name's Juan. Now, Juan is a Vietnamese entrepreneur who listed his company in the Vietnam Stock Exchange. So he is more a traditional business, which is selling mobile phones. He makes about $1.2 billion a year in revenues, and his company sold for $500 million on the Vietnam Stock Exchange. He's recently sold all the shares, and he's going back in to build other companies that he wants to exit. Now, the more these stories get more public, the more people want to follow them. In the same way, Grab Taxi and their funding fundraising success has set a benchmark for a lot of Malaysian entrepreneurs to aspire towards, right? Hopefully the herd mentality will kick in and people will start believing in their local markets, number one. Number two is that a lot of local markets, at least attempting to innovate, we don't know how successful they'll be. So I've been and maybe Adrian, you've heard of this in Thailand as well, the MAI, right? So the Thai Stock Exchange has been very proactive, reaching out to startup investors in the ASEAN region and in Thailand, right? Trying to change their rules to make it easier for startups to raise capital on their stock exchanges. Tokyo Stock Exchange, every other startup event, they're sending teams of 6 to 8 people down, talking to startups one-on-one. Hey, here's my card, right? When you go IPO, think about me. So I think their stock exchanges also are trying to adapt to what's going on. So again, when I look at what things are trending positively, I think there's signals of hope, right? You know, I'm not that deluded to think that like the problem's solved, but I think people are trying. So there could be some new stuff opening up locally.
So, Kylie, I was guilty back almost exactly 20 years ago of being a board member of the first ever internet IPO in Australia. And the challenge we have, which I can guarantee you is true in Thailand and Malaysia and Philippines, is the analysts have no damn clue as to what's going on, number one. And number two, the listing is fantastic for your ego, but the liquidity is such that you can never get out. And if you sell, everyone panics. So those are two big cautionary tales. You've got to have analyst coverage and you have got to have liquidity. So if you want to be the pioneer that lists first or one of the first 10 listings, you have to do our eyes very, very wide open. It's taken Australia 20 years to get there, so we're a little bit behind.
I think the eyes wide open point is probably the important part, because the conversations I had with Nick's around like how he managed his Philippines IPO, right? Like he's approaching it from a kind of startup thinking. He's trying to hack his IPO. Right, so you're trying to build up the story, build up all the analyst stories, and the way he engages with the analysts and institutional investors, everything else. It's like the same kind of thinking that we apply to innovating on our startups. He said that if you just apply it to the public markets, you can game it and become one of the hottest stocks, and not game it in a legal way, but you can leverage what the energies and the way it's flowing to your benefit. So but I guess the Malaysian Stock Exchange is something that Suresh, right, when you guys decided to list JobStreet in the Malaysian Stock Exchange, you must have had quite a perspective as well, right? So maybe you could share your experience there.
Yeah, so it was early in the game for us. So that was 2004 when we listed on NASDAQ initially, and then we moved on to the main stock exchange. I mean, at that point, I think we wanted to create some liquidity for the early investors and also for the team. And there weren't that many opportunities for us. We could have maybe done Malaysia or Singapore. We didn't know enough about ASX, so we didn't venture so far. We weren't big enough for some of the other bosses. So really between Malaysia and Singapore, we picked Malaysia because that was home and that's where our main business was. So we thought we could benefit from that relationship. But we didn't have a big plan as to how fast or how big we were going to grow. Kind of pleasantly surprised about how much we've grown, so it's worked out well for us. But I think the good news now is that if you're a startup person now, and as Patrick has shown many of us, there are more options out there that people can leverage off.
And just a follow-up question: as a listed company, given the pressure to produce short-term results and having to explain quarterly results to the analysts, did you feel that you were under pressure to perform, and more specifically, were you forced to employ M&A as an active strategy in growing the company because you were listed?
We were an interesting company. When we listed, about 60% of the shares were still held by a small group of people. So the original team still held about 60% of the company. The spread out in the market was not very big. So a few big funds picked us up. There was very little trading on JobStreet. So there wasn't a lot of pressure on us to sort of meet quarterly numbers. We weren't very fussed about the stock price. We were quite busy and focused on running the business. Having said that, we had tremendous growth over the years. So every time we set a budget, maybe we didn't set a budget that was high enough, we happened to meet or beat those budgets, except in maybe 1 year during a recession. So we were quite fortunate. Most of the shares were held by a small group of people who worked in the company. So there wasn't a lot of pressure to watch the stock price closely.
So I think you made a very good point. I think the IPO shouldn't be the ultimate goal for each and every company as an exit, because there are situations where the IPO or the pressure to be a listed company is more in a disadvantage to the development of for the long-term development of a company. But yes, there are so many advantages of being listed, having an acquisition currency, easier access to more money through capital increases and so on. But my feeling is quite a lot of companies maybe are too early to try to go public, and should, if they have the opportunity, to try to raise private money, VC money, private equity first, and then grow a bit more the business, have a more sustainable, long-term, proven business model, and then go public. Because in Germany, Rocket Internet, I think they decreased their share price by 50% over half a year, because, surprise, surprise, now the investment community realizes that the companies are making losses, and will continue to make losses, and that's the reason why the share price went down. So it's maybe, for them it was good because they needed so much money, and but overall I think it's the exit as to a strategic buyer is for a lot of companies a much more viable option than to try to IPO.
And frankly, from an investor perspective, an exit is ideal because you get out. If your company lists, it can take you many, many years to get your money out. So from an investor perspective, an exit is much cleaner and much faster.
So interestingly enough, for the JobStreet team, even though we did an IPO, pretty much the core team actually exited after the listed entity was, after the business was acquired by Seek.
Yeah, we listed several companies in the Philippines, and so we had a good experience and a bad experience. One experience was exactly that. The analysts didn't understand the business model. We spent a lot of time educating the market. The liquidity wasn't there. But on the other hand, we had another company which we listed, which gained so much attention, PLDT acquired it. So I think it, sometimes it might be case to case, but I think it boils down to timing. And in a good market, everything's great as a public company, but in a bear market, all of a sudden you start feeling the pressures.
So let me share with you the secret that we've learned that makes for a good exit. So not a public company exit, but an exit to a larger acquirer. And here is the secret, and it's a little bit counterintuitive. So when I was living and working in the US and investing there, the ideal company has 20 engineers, 20 patents, and generates a couple of $1 million per employee. That's the ideal. In Southeast Asia, it's the complete opposite. When someone comes and buys your company here, the first thing they do is kick out your tech platform and put their tech platform in. So what is it that you have of value? Well, this is what it is, and this really is what we've learned that gives you a 3, 4, 5x premium on your exit. It is the following. Solve your problem with people that are difficult to hire. If you have a team of 200-300 people that someone needs to replace, the overhead and the time it will take them to do that is substantial. So people are actually a genuine asset. And anyone hiring today who's going through the pain of hiring will know that. People are your biggest asset. So that's number one. Number two, solve a hard problem. It should be so hard that when an American or a German investor looks at it, they go, oh hell, I cannot possibly do this. So solve something that's hard because that makes you very attractive. And then the third thing in this list of 3 is do something that is regional. If you have your solution up and running in 3 or 4 countries, an American acquirer looking to come into the market has a choice. They can look at 4 or 5 companies in 4 or 5 markets, do 20 lots of DD, negotiations, then end up with 5 companies, with 5 cultures, 5 management teams, 5 tech platforms, 5 different financial systems, or they can pay you a premium for your business. So that's really what we've learned the hard way. People, multiple markets, and multiple, people and markets. So if you get that
Solve a
right,
hard problem.
awesome.
And Thomas, I guess your company's done this very successfully in Asia. You've basically, you're on the buy side, but you've acquired several deal sites in Southeast Asia. Can you talk a little bit more about that and share with us?
So it's not that we acquired them, it was more that we invested in them at a very, very early stage, sometimes only in a team or, for example, in a common investment that we have with Ardent in an already existing company in Sri Lanka, which was just about to launch their website, so very, very early stage. And this is was also our investment strategy, that we only invest when we think that we can add value on top of the money that we invested. So we had at some point of time more or less a similar business model in 30 different countries all over the world. And even if any founder said, hey, Thomas, you don't understand my market is completely different to all the other 29 markets that you have. But nevertheless, there are certain patterns in the challenges that the founding teams face. And we try to give advice or to match the different people to help each other growing their respective businesses. And that was the same here, for example, in Malaysia with MyDeal, and in Singapore with Deal Guru, and also in Thailand, Philippines, Indonesia with Ensogo, where we were coming in as investor at a very, very early stage and try to be very hands-on and supportive.
I think Enrique, there's something that's also exciting for us is for this region in the next couple of months is also the new generation of acquirers. So these new acquirers, right? They are starting to formulate their strategies and starting to take positions, starting to be bold in how they want to buy. And just now you mentioned PLDT, right? So when we met with like MVP and the rest of the team, right, at one of our trips there, he said, okay, we're gonna make we just made one of our tech investments in e-commerce. We can't tell you what it is, right? It's gonna be announced in 10 days. So we thought, okay, what investment is that? He cut, I think it was $450 million to buy 10% of Rocket Internet, right? And then afterwards, like he continued to. He had this $200 million fund. He just acquired one other Filipino company, and they're making smaller acquisitions. I think the gentleman who came up earlier from Axiata, all the way even Media Prima and so on and so forth, they also had a history of smaller acquisitions, and they're ramping it up. So Axiata just bought Comly, right? Which you guys, it's Ardent, your partners were previously involved with. So they just bought Comly. SPH, Singtel, a lot of the regional media groups, right, are starting to buy more companies too. So also, what was the other media company in Singapore? What are the other Singaporean media companies? MediaCorp, right? MediaCorp bought 51% of Kapan Lagi Networks in Indonesia. It's like a digital media group, right? So I think there's a new generation of corporate buyers locally who are also out hunting for deals. Entrepreneurs who build companies which are useful enough for them. Investors who invest in them at low enough valuations, maybe between $1 to $3 million, can get a very quick exit and a quick monetization quite fast from these smaller exits.
I think that topic on next generation acquirers is very relevant, and we've seen telcos certainly like PLDT, but I think we're also starting to see a lot of China tech companies moving to Southeast Asia, and I think there could be a wave of Indian tech companies looking at Southeast Asia.
Yeah, actually the Indian, the housing.coms and so and so forth, they've been out here looking around, those who receive like billion-dollar checks out from SoftBank, they need to find some way to create more growth as well. They've been shopping, like the BAT, right, the Baidu, Alibaba and Tencent, the M&A people do reach out and talk to us every now and then as well, just to snoop what's going on. So I think people are interested in buying in Southeast Asia. Some of them have taken positions and started executing their strategies. Again, that represents the new generation of acquirers, which we've not seen in the past 10 years as much.
Okay, we have 1 minute left. I just want to ask the panel, what's your fearless forecast for the next 3 years in terms of exits in this region?
Markets don't look so good, so they're it's probably a better time to focus on building the business than an exit, but that's hard to tell.
I think there's going to be a lot. I think the return of companies who actually make revenues and profits will come around at some point, right? I think past 10 years, there's been a lot of focus on growth, companies who grow very quickly and maybe delay monetization. But I think making money could be the new sexy, right? Making money could be the new black, right, over the next 5 years. And it's exciting to see a lot of Southeast Asian companies actually have a bias for monetization. They feel nervous if they don't monetize as much. And so maybe these companies would become worthwhile to build and more exitable, right, next couple of years.
I have one word, which is China. China is frightening because it's either the biggest exit opportunity we have for all of our collective companies, or these guys are going to come out and just stomp on us. I think it's quite binary. So I'm super excited and scared out of my mind as to what Alibaba and JD and all those guys are going to do. And I can tell you they've all walked through our office in the last 3 months. I don't know, but I'm very scared and excited at the same time.
Yeah, WeChat is their only R&D center outside of China, and the only country that they're launching with their WeChat payments in is Malaysia. So the teams come out here and they've got like their own center over here. So I share the same sentiment as Adrian. Well, how about you, Enrique? What do you think? What's your forecast, man?
I think,
And especially for SoftBank Philippines as well.
I think the fundamentals don't change. Southeast Asia is solid. The demographics are there. The economies will continue to grow. And as long as the economy continues to grow at a healthy rate, I think we're going to attract a lot of capital. I think we're going to buck the trend in terms of the rest of the world. We're highly resilient. Having said that, valuations will come down. We've seen some pretty lofty valuations over the last year and a half. Certainly, these multiples didn't exist 5-10 years ago when we're looking at startup investments. So I think it's from an investor. When I wear my investor hat, I'm actually think the correction is healthy.
Not healthy for you as well.
Yeah, so I think we're over time. Thank you very much for your thoughts.